What's up, y'all? Welcome back to another video. Now, in this video, I'm going to be talking about how to actually go about getting a small business loan. Okay. So if you're someone who's been looking to get a small business loan for your business, or you're planning on starting a business and you just want to know what kind of loans are out there and how you can, position yourself to eventually get it, then you won't want to miss this video. So stay tuned. Alrighty, now when it comes to actually getting a loan, there's a few things that you kind of a few questions that you want to be able to know the answer to before you just jump straight into looking for business loans. Okay, they're a lot more intricate than a personal loan, right? Because they're going to want to be a little more stringent in terms of your operations and things like that. And so there's just certain aspects that you want to make sure that you're aware of before you just deep dive into trying to apply for loans and things like that. Now, a few of these things are, how long have you been in business, right? They're going to want to know how long you've been in business because that gives them an idea of, your longevity. If you tell them I've been in business 2 months and I have, we haven't started operations yet, they're less likely to give you a loan, right? At least a loan with no personal guarantee, right? You're more than likely gonna have to put some money down, or excuse me, they're gonna have to pull your credit and see how you are, and then you're gonna have to put down a guarantee in terms of, if your business isn't able to pay the loan, you're gonna be the one personally liable for that debt. So that's the first question. The next one's gonna be, what is your revenue, right? That one's a clear cut one. It's the same thing that they would ask if you try to get a personal loan, right? They'd wanna know, your income, how much money you were making. Okay. The next one is profit margins. So this one's a little different. No, it's kind of the same thing with personal loans, right? They're going to want to know what your debt to income ratio is. And that's really what it is. They want to know like how much money are you bringing in and how much money are you spending, right? By them just doing that math, seeing the difference on it, they can get an idea how much money you have left over after you're operating the business. And, the idea being that money that you have left over is the money you're going to be spending in the future to pay down the loan, right? So if it looks like you don't have enough money to pay down a loan of the size that you want, then it might be a situation where they decide to reject you. Now, the last two are going to be more so for situations where, you're kind of on the fence. Things like, what is your credit score, right? A lot of personal loans, especially for smaller businesses, they're going to want to pull your personal credit. So that's something that you just want to make sure that you keep in mind. So they will want to pull your credit score, your personal credit score, and see what it is, as well as your business credit score, right? So that can be the paydex score if we're talking about Duns and Bradstreet. They're going to want to pull all your reports to kind of see what you got going on, okay? Now, the last thing is going to be collateral, right? It might be a situation where, you may need to put down collateral for the loan, or it might be a situation like, for example, you might be trying to buy equipment, right? And in that case, that equipment is the collateral. You can kind of look at it like if you're getting a car, right? You got a car loan, right? If you're not making the payments, they repossess the car. It's kind of that same idea, right? So that's kind of how you can look at it. So those are going to be the first 5 questions that you want to answer. The next thing you want to kind of look at is, what type of loan do you think you actually need, right? Do you need an installment loan? Is it for like maybe you have a project going on and you need X amount of dollars to complete that project, right? Or even, for example, you're trying to grow the business and you just need a cash infusion of a certain amount, right? Things like that. Or do you need a revolving line of credit? So that can be either a bank line of credit, or that can be even something like a credit card, right? Where you're going to be spending money, paying it down, and then you're going to need to spend more money and pay it down, so on and so forth. Now, me personally, that's kind of what I prefer, is having access to the cash whenever I need it. So lines of credit and things like that. But it kind of depends on what situation you have and what you got going on to figure out exactly which one's going to be the best situation for you. Now, whenever it comes to what types of where to actually get these loans, I've kind of broken it down into really 3 categories. There's going to be a lot more categories, but I think these are really the 3 main ones that I think people typically look at whenever they're actually getting a loan, especially whenever you're first starting off. The first one is going to be the SBA, okay, the Small Business Administration, okay. Now, they're going to be the most stringent, okay? It's the government. They're probably going to ask you, they're going to require a lot of documentation from you, right? They're going to want a lot of documentation. It's going to be a long process, right? For you to be able to get whatever resources you're requesting from them, right? In terms of how much money you want. Now, I have seen things, people talking online of them releasing funds as high as like 4 or 5 million, things like that. But I venture to guess that you have to be pretty well established to get money like that. And, they have to see a lot of consistency over years and years of time. But this is one option. So if you have a business where your business has been operating for quite a long time, then the SBA might be a good bet for you, right? In terms of you to be able to get a lot higher of a loan or a payout. Okay. Now the next thing is going to be more traditional banks. Okay. Now traditional banks, they're going to want to see that you've been in business at least 2 years, right? And they're going to also want to see that you have just good credit in general, right? They're going to definitely want to pull your credit score, especially if you're not like extremely large corporation, things like that. They're going to want to pull your credit and kind of see where your credit score is, and that's going to help them be able to gauge better whether to give you the money or not, and how responsible you are with cash in general. Now, one thing that I do want to touch on with these first two options is you got to keep in mind that these two options are for people who really don't need cash fast. Okay, if you're in a hurry to try to get cash, you know, those two options, the traditional banks and the SBA, their process is going to be a lot more stringent and more, you know, detailed, and they're really going to want to analyze your financials, and we'll jump deeper into what kind of information that they're going to be asking for you and that you should get prepared. But, you know, they're going to want to deep dive into your information. It's not just going to be something where like you just fill out a form online and then boop, says, you know, you've been approved. You know, at Chase, they just say you've been approved. The SBA says you've been approved and it's done, right? They're going to want a lot of documentation, and they're probably going to take their time trying to sift through all that stuff and ask you for more information, so on and so forth. Now, the last option is going to be online lenders. See, I think a big trend that's happening right now is a lot of fintech companies are coming into the lending space in general. So you're going to see it with things like credit cards. I've shot a few videos about like the Wells Fargo credit card, which is, that one's a secure card, but it helps build your business credit. But also another one is a DIVVY card, which I've shot a video on about. And that one's kind of talks about, and I'll link to both these videos down below, but they kind of just touch on, you know, building or finding other ways to be able to leverage or figure out whether you qualify for a certain amount of money, right? So just different ways of underwriting. So it might be situations like, for example, you know, they'll look at your bank account and see how much money do you have coming in, going out, and you know, what you're spending your money on, and that can help them decide how much that they should lend out to you, right? So they're using just other types of you know, they got their own proprietary algorithms, and they're using that stuff to be able to dictate how much or figure out how much they should give you, right? And so that's what I've really found interesting is these new online lenders, and that's kind of what's going on, right? Online lenders are great for if you're in a situation where you don't have any type of collateral in your business, you know, you lack the time in business, right? And most importantly, you need funding quickly. Okay. Now, one thing I will say is it's going to come at a cost, right? It's going to be a situation where if you need funding quickly, you can more than likely expect that you're going to pay a higher interest rate, okay, higher APR. More than likely, whether they tack on fees that they wrap into the loan or what have you, you're going to end up paying more for the same amount of money than you would with, you know, a traditional bank, the SBA, so on and so forth. Okay, these guys, online lenders are going to get it done a lot faster for you, but at a cost. So now, what do you need? This is just a general idea of what you can expect to need. I'd recommend you already gather this information, and then whenever you're reaching out trying to apply for different loans, then they're going to let you know what other information that they like to see from you. Okay, so just a few different things are business and personal tax returns. Those are pretty much going to be like almost guaranteed when it comes to you know, really any company apart from like the fintechs. Business and personal bank statements. You're going to want your business's financial statements, business legal documents, right? They're going to want to make sure that you're a legitimate business, right? They want to see your articles of corporation. You know, if you have like a franchise agreement, if that's what you're doing, if you want a franchise, maybe a commercial lease, things like that, right? Things basically to make sure that you're like a legitimate business, and in some cases even a business plan they might want to see. And that kind of really depends on what type of loan you're getting, what it's for, so on and so forth. Okay, but if you just have those things, you gather those pieces of or those specific documents, you're going to be well on your way in terms of getting you know, getting through the process a lot faster. I've seen a lot of people who what they'll do is they'll just show up there and ask questions and say, okay, let's get started. And then, you know, that's when they're saying, do you have this? Do you have this? Do you have your financial statements? Do you have your bank statements? And then it's like, oh no, I don't have all that. So now I got to find, you know, I got to spend a couple of days collecting all that information instead of already having that information, anticipating that they're going to request at least some of those documents. Now, at this point, that should be able to give you a great idea or a great starting point. One thing I will say is be sure that you shop around based off of what type of loan you're looking for, right? Whether you're looking for a loan or you're looking for a line of credit, whatever it is, you want to make sure that you're shopping around. I do not recommend that you just apply at one place and you take that first, you apply at a place and immediately take that loan, right? The first loan you see. I recommend that you apply at a few different places. That way you can kind of shop around. You got to keep in mind, like, since this is more business credit space, it's not as regulated, and you never know what could be going on with the company. It could be a lender who, maybe they're trying to lend to, they're trying to lend out to more people, so they're willing to lower down the interest rate. Or it might be a company who's trying to just kind of be a little more stringent, so they're trying to increase the interest rate, right? It could be all types of different situations. So you want to make sure that you are shopping around before you just jump on the first loan that you see. Anyways, that's gonna be pretty much it for this video, guys. I appreciate you taking the time to watch this. Now you should have a general idea how to actually go about getting a small business loan. If you found this information valuable, or you're even thinking about building out your business credit, check out the other videos I've shot, and I'll link to them down below, including a series that I'm shooting on how I'm building my business credit without any type of without using my social, so on and so forth. And I've also shot a few videos on how to get on specific different types of credit, right? How to get an EIN, how to get a cheap business phone number, a cheap email, professional business email, so on and so forth, right? So I've shot all these different types of videos, and I'll link to them all down below so you can take a look at them. Alrighty, so that's gonna be pretty much it for this video, guys. I will see you at the next one.